So, Bank of America just said the thing no one on Wall Street wants to hear. The era of the biggest stocks dominating the market might finally be over. Yeah, apparently Nvidia, Microsoft, Meta, and their rich little AI friends might have to brace yourself, share the spotlight with the rest of the market. Tragic, I know. It's like being told that Taylor Swift has to open for Nickelback. So for the past decade, the stock market has basically been like the Avengers, except instead of Iron Man and Thor saving the world, it's been Apple and Nvidia keeping your 401k alive. The biggest 50 stocks in the S&P 500 have outperformed the rest of the index by, get this, 73 percentage points since 2015. 73. That's not outperforming, that's showing up to a kid's soccer game and bringing Messi. But here's the thing. We've seen this movie before. Late 1990s, tech stocks went parabolic. People thought pets.com was the future. Then boom, .com bubble. And after that, value and small caps finally had their day in the sun. Bank of America strategist Savita Subramanian says we might be at the turning point, which means all of you who only know how to spell Nvidia, you might actually have to learn what a small cap is in the first place. Don't worry, I'll explain. Small caps are like your local dive bar stocks. They're messy, they smell funny, but sometimes they're a lot more fun than the big chains. So why would megacaps finally lose their crown? 2 words, the Fed. Bank of America says the market's regime indicator, yes, they actually call it that, like it's some authoritarian government, is shifting from downturn to recovery. And in recovery mode, historically, it's not the apples of the world that win. It's the little guys, the small caps, the ones that don't have a billion-dollar AI lab, but still manage to make a buck here. Add in higher inflation, and suddenly the S&P 500 broadens out. The translation here, your portfolio might actually need more than just Nvidia to survive. Shocking, I know. But look, Nvidia has doubled since April. Doubled. That's not normal. That's what happens when you mix AI hype with FOMO and a little sprinkle of financial mania. The so-called Magnificent Seven, Apple, Microsoft, Amazon, Alphabet, Meta, Tesla, and Nvidia, have basically been dragging the market up like a group project where only 2 kids do the homework. But Bank of America is saying, hey, maybe the freeloaders, the other 480 companies, might finally start to contribute. And here's the kicker. We're already seeing cracks. The Russell 2000, the index for small caps that hasn't done much since 2021, is up 6% in August alone. The S&P is only up 3.5%. That's Wall Street's way of whispering, hey, buddy, the party might be moving. It's like when you're at the bar and suddenly all the cool kids leave for the after party. If you don't move with them, you're stuck buying tequila shots for strangers who don't even follow you on Instagram. So what does this mean exactly? If Bank of America is right, we're entering a new era of stock picking where stock picking actually matters again. No more just buy Nvidia and chill. Now you might have to do research, like read, or more likely you'll just buy an ETF and pretend you're a genius. Don't worry, we've all done it before. The point is, the mega stocks might finally stop carrying this market on their backs, which is good news because Nvidia's already hunched over like the hunchback of Wall Street. So yeah, diversify, look beyond the AI hype, and maybe, just maybe, give that small, dusty, small cap index a little love. Who knows? It might just be the comeback tour of the decade. Thanks for showing up today. I'm your host, Max Pitts. This is Trades and Gains, and I will see you guys in the next episode. Make sure you like, subscribe, hit that bell notification, and feel free, join Investor Central Club today. Bye.